Moving on further in chapter 10, payment of taxes. Section 51 deals with TDS. TDS has to be deducted by department or establishment of central government or state government and or local authority or government agencies or any other persons notified by the government. They have to deduct TDS at 1% provided the total value of the contract exceeds 2,50,000 rupees. And it has been provided that if the recipient is in one state and the location of the supplier and place of supply is in another state, then there should not be any deduction of TDS. And for the purpose of tax deduction, the tax deduction will always be applicable on the base amount of the value of supply. You have to always exclude the taxes for deducting the TDS, but for calculating the total value alone you have to include the GST also. 51 subsection 2, you have to pay to government within 10 days, and again you have to furnish the certificate of TDS containing certain particulars, and if you fail to furnish the TDS certificate within 5 days of crediting the amount to government, then you are subject to a late fee of 100 rupees per day, and it is subject to maximum of 5,000 rupees, and the deductee will claim the credit of TDS in the electronic cash ledger, and deductor has to pay this money to the government, and if he fails to pay the TDS amount to the government, then he has to pay interest also including TDS amount, and determination of amount in default will be made in the manner specified in section 73 or 74. So they will issue a notice, demand notice, show cause notice, and then collect this money in default, and if there is any refund, it will be dealt according to section 54. Section 52 TCS. The obligation to collect TCS is on electronic commerce operator. When the suppliers are supplying through electronic commerce operator and the consideration is being received or collected by the operator, then they have to collect additional TCS of 1% on account of CGST and similar amount for SGST also. And how to calculate net value of taxable supplies? You have to calculate total aggregate value of taxable supplies minus returns is considered as net value of taxable supplies, and the power to collect TCS is without prejudice to any other mode of recovery from the operator. So this is additional power to collect money. TCS shall be paid to government within 10 days after the end of the month. You have to file a monthly return containing all the outward supplies affected through operator, and operator also has to submit a annual statement before 31st December following the end of financial year, and if the operator discovers any omission or incorrect particulars, he has to rectify that before 30th September or annual statement, whichever is earlier. Supplier can claim the credit of TCS in electronic cash ledger. Whatever operator is furnishing as a statement on a monthly basis will be matched with GSTR 1 of the suppliers, and if it is matching, then fine. If it doesn't match, then discrepancies has to be communicated to both. If the discrepancy is not rectified, it will be added to the output tax liability of the supplier where value furnished by the operator is more than the supplier. And on tax payable, you have to also pay the interest, and there is a power given to authority not below deputy commissioner to serve a notice to the operator and seek some details, and operator has to submit those details within 15 working days, and if he fails to furnish without prejudice to any action under 122, he will be liable to pay 25,000 rupees penalty. Moving on to section 53, transfer of ITC. Whenever the CGST credit is utilized for the payment of IGST, then the central government shall transfer same money from central account to IGST account. So they will have to transfer from CGST account to IGST account. Moving on to chapter 11, refunds. Section 54 talks about refund of taxes. You have to file application for refund before the expiry of 2 years from the relevant date. What is relevant date we will see later in the section 54. And you can also claim refund of your electronic cash ledger balance as discussed in section 49 subsection 6 through the returns furnished under section 39. And for UNO and multilateral financial institution and organization, they can also file application for refund of inward supplies within 6 months from the last day of the quarter in which such supply was received. And the registered person may claim refund of unutilized ITC only in two instances. One is on account of zero rated supplies without payment of taxes, that is exports under LUT, and second is when the rate of tax on inputs is higher than the output taxes. So this is on account of inverted duty structure. The application for refund has to be accompanied by documentary evidence, and if refund is less than 2 lakhs, then you need not furnish the evidence, and self-certification will be sufficient that the incidence of tax has not been passed on. 54.5 says that proper officer, if he is satisfied, he will pass the refund order and the amount will be credited to consumer welfare fund. Subsection 6 says that if the refund is on account of zero rated supplies, then a provisional refund of 90% will be given, and thereafter a final order will be passed for settlement of the refund after due verification. Finally, the refund order has to be passed within 60 days from the date of receipt of complete application. Instead of crediting the money to the fund, consumer welfare fund, it will be paid to applicant in the following instances: when the refund of tax paid is on account of export of goods or services, and if you are claiming unutilized ITC under subsection 3 as mentioned above, which is on account of inverted duty structure on or ITC on account of export of goods under LUT, and refund of tax paid on supply which is not provided either wholly or partially, and even invoice was also not issued or refund voucher has been issued. So in that instance, since you have not passed on the tax incidence or tax burden to the consumer, you will be allowed to claim the refund and it will not be credited to consumer welfare fund. The refund of tax in pursuance of section 77, which is tax wrongfully collected and paid, tax and interest paid but not passed on, or any other case notified by government. So in all these instances, the refund will be directly given to the applicant. It will not be credited to consumer welfare fund. So all the refunds will be made according to subsection 8 only, irrespective of any judgment or other provisions of the act or law. Refund will not be given to applicant unless it is covered under 8A to 8F. Only if it is covered under 8A to 8F, it will be given to the applicant. In all other instances, it will be given to consumer welfare fund. And the proper officer may withhold the payment of refund due also, or he may deduct from the refund the amount due by a taxable person in case you have defaulted in furnishing the return, or you're not paying the required taxes, interest or penalty which has not been stayed by any court. In that case, he can withhold or deduct the taxes. And if the commissioner is of the opinion that it is likely to adversely affect the revenue on account of fraud or malfeasance, then he can also withhold your refund after giving reasonable opportunity of being heard. If they withhold the refund under subsection 11, but later as a result of the appeal you are entitled for refund, then they have to pay interest up to 6%. And any advance tax deposited by non-resident taxable person or casual taxable person will not be refunded unless he furnishes all the returns for the entire registration period, and you will not be given any refund if the amount is less than 1000 rupees. Relevant date of 2 years from the relevant date. So the relevant date means different dates for different scenarios. In case of goods exports through sea or air, it is the date when the goods leaves India. If the goods exports is through land, then when the date when it passes the frontier. And if the goods exports is through post, then the date of dispatch to a place outside India is considered as relevant date. Deemed exports, date on which the return relating to deemed exports is furnished. Service exports, the date of receipt of convertible foreign exchange where supply is completed before receipt, or the date of issue of invoice where the payment is received in advance. Refund of unutilized ITC, end of financial year in which such claim for refund arises is considered as relevant date. Tax paid provisionally, the date of adjustment after final assessment. In the case of a person other than the supplier, the date of receipt of goods or services, or both. In any other case, the date of payment of tax will be considered as relevant date. Moving on to section 55, refund in certain cases. Government will specify any specialized agency of UNO or multilateral financial institution and organization. They can claim the refund on notified supplies received by them. Section 56, interest on delayed refunds. If the tax has been ordered to be refunded and you are not refunded within 60 days from the date of receipt of your application, then you are entitled for interest up to 6% from the 61st day till the date of refund. And if you claim any refund which is arising from adjudicating authority order or appellate authority order, appellate tribunal or court proceedings, and you have applied for the refund and you have not been granted refund within 60 days, then you are entitled for interest not exceeding 9% from the 61st day from the date of receipt of application till the date of refund. Section 57 talks about consumer welfare fund. Government shall constitute consumer welfare fund, and the fund will be created with the amount referred in refunds section 54 subsection 5, and any income from investment of the amount will also be credited to this fund. Such as the monies received by this fund is also credited to this consumer welfare fund. And section 58 talks about utilization of consumer welfare fund. All sums credited to this fund will be utilized by the government only for the welfare of consumers in the manner prescribed, and government or authority specified by it shall maintain proper books of account, and they will prepare an annual statement of accounts in consultations with CAG.